From the floor of the CME Group, this is Danny Riley with today's cash close. And I want to apologize about not getting any videos out last week. I did a really good one, but the voice didn't work, so we had to can it. The name of this video today, the S&P 500 futures, China, and crude oil under 31 bucks. Can you believe that? The high of the day in the S&P came in at 1924.75 after the open. The low came in at, 1892 half just before 1 o'clock Central Time. And last, on the 245 cash close, we're trading 1921 even. We're up 9.75 handles. Total volume, 2.35 million minis traded and 10,000 big S&Ps traded in the pit. The MIM started showing like 250 million to buy before 2 o'clock Central Time, gradually went up to like 450 million to buy, and the actual MOC came in by 700 million. Tomorrow, let's see what we've got. We've got Stanley Fisher from the Fed speaking. We have the NFIB Small Business Optimism Index. I got that. We have the Redbook, we have the JOLTS number, we have a 3-year note auction, and we have Jeffrey Lacker from the Fed speaking. Now look, I'm sorry about not getting that video out on Thursday. I did a really good one. China, North Korea nukes, B-52 bombers. Wow, what more could you ask for? But you know, at the end of the day, this is just piling and piling and piling on more risk. As day traders, this is great. But as investors, this couldn't be very good for people. Now look, you know, the S&P has sold off a total of 175 handles, or 9.5%. We fell just shy of a 10% correction. Now here's what I'm kind of thinking. I know that the markets look bad. I remember I was the guy that said the range of the year would be 2250 down to 1700. I wasn't saying 2250 was coming early. We could tell how this was going in the beginning, at the end of the year. And surely, if you didn't catch on right away in the beginning of the year, you had to catch on at some point last week. That was just brutal. But, you know, the other part about this and what we've seen is the S&P has been trying to go up a little bit. But crude oil keeps coming down. And as we all know, the energy sector makes up a very large part of the S&P, or at least it used to. I'm not sure how much it makes up now. But that said, it still controls things somewhat. And while the S&P may want to bounce, and it does, when crude oil is doing that, and those stocks are for sale, it makes it really hard for the futures to bounce. But that said, late in the day, the S&P came flaring back up, like it usually does when the MIM started showing stuff to buy, and then we came down a little bit after the 3 o'clock cash close. But look, at the end of the day, I want to point out a couple of things. One, last week was so busy, no one even paid attention to the jobs report until late Thursday, early Friday. I don't care what anybody says. It wasn't even on the news. I was looking all over for it. I knew that that was the mindset. And then when we had that big rally, like we've had on most of all these rallies that we've had this year after the market sold off hard, it failed. They've all failed. But that said, I don't think that that's going to be the case as we roll into the latter part of the week. Tomorrow, the S&P cash study for the January expiration is the firmest day of the week. And patterns fitting, like I've been talking about, week Fridays rolling to week Mondays. We did have a thunk-a-dunk overnight, but then the futures rallied. And again, you have to be always kind of on the lookout for those Sunday night lows. And then after the S&Ps rallied today, they went back down to those Globex lows, as they always do. They got to do that Globex retest, and then they rallied again. My gut, and this has got nothing to do with what's going on in China. This is more to do with what's going on in the U.S., is that, like last week, when everybody overlooked the jobs report, they're somewhat overlooking the earnings report because of all this stuff going on in China and all these other moving parts. That said, we're going into the Jan options expiration week, and I think everybody's short up their wazoo. And that once we broke down through 1900, we've run a lot of stops on the downside. And like I said, almost down 10% in 6 trading days. That's a lot. I would think that we're getting ready, or at least the S&P would level off a little bit. And I don't think China can keep going down as it is. And additionally, I think if China started to short cover and crude oil started to short cover a little bit, the S&P would go flying up. So here's my question. Are you saying 1850 first or 1950? I say 1950. I know we closed good, but I was saying 1950 earlier in the day. And I'm going to push it out a little further. If we get a good turnaround Tuesday, I think that there's a good possibility. Not only will we trade back up to 1950, we can trade to 1960 or 1970. It can't keep going like this forever. They'll run everybody out of business. But that said, you guys, like I said, I'm sorry I missed that video on Thursday. That was a good one of my better. But I want to remind everybody about one last thing. I really, really believe what we're doing at Mr. Top Step is on the forefront of what forums are all about. It's not a one-man band. We got Shy Stock in there. We got Top Notch. We got William Blount. We got Rob from DTG. We're working on a couple other guys, and at the end of the day, I think when you take all this talent and you put it together, if they can cooperate and they don't have big heads, it comes out really, really well for the people within the forum. And our guys don't have big heads. They make, they lose. At the end of the day, they come back in the morning to hit it again. And that's what trading's all about. And I'm going to finish it up by saying if you have started out, a lot of people, I get emails a lot from people, and I respond to them all. I do that because I feel bad for people sometimes when they're depressed or they're losing money. Sometimes they need a little push. Sometimes they need a little coaching. And I'm not really, like I've said, I'm not a life coach. I'm a trader. I'm a guy that didn't go to school. I ended up on the floor fighting my ass off to have what I got. And at the end of the day, my advice is the same advice that the pit bull gave me when I met him. If you want to make the money, you got to do the work. And you know what? Doing this type of work takes you away from all the other things. And the other part about this and final part about this is maintain your risk management. Don't go crazy in the beginning of the year with the markets moving the way they are. It's okay to push back from your computers. It's okay not to touch the keyboards to buy and sell. In these types of market, when people are losing, I'm going to say this very candidly. No one cares. The brokers don't care. No one cares. You're just a blip on the screen. You're in, you're out, you're goodbye. Don't have that happen. Maintain proper management. Put in stops. Get in, get out. And don't fall in love with your positions, as I always say. We'll leave it like that. I'll be back tomorrow with another video. I guarantee it. And I think 1960 before 1850. Okay, we'll leave it like that. We'll see you tomorrow on the opening print.